Hi everyone. Today we are going to do AS level May-June 2021 paper 11. Last class we had done question number 1 to 15. So today we will do question number 16 to 30. So we can move to the question. Before we are starting, if you are not subscribed to my channel yet, please subscribe and continue watching. It's very happy to hear that my videos are very useful to you. So let's start. Question number 16. A company made a right issue of ordinary shares at premium. Company is issuing a right issue at premium. How will be treated in financial statement? What do you mean by premium? Premium means company issuing the shares more than the actual price. That is called premium. When the company issuing right issue, capital will increase, cash will increase, and when they are issuing at premium or other reserves that also will increase. So they are given the answer as equity in the statement of financial position. Yes, when the company is issuing a right issue, it will show as an equity. Equity means capital. So the first option is correct. Second, as a movement in the statement of changes in equity. Equity means the capital fund of company. So when there is a premium, it will change, the premium amount will increase. So they will have a change in the equity. So the second option also correct. Third, as a non-current liability in the statement of financial position. When the company issuing the right issue, there is no liability. The capital increase, cash increase, and when they are issuing at premium increase. So it is not affecting the liability of the in the financial statement. So the correct answer is question number option 1 and 2. So A is the correct answer. Next, 17. The income statement of X Limited for 2020 showed incorrect profit figure because 10,000 of goods has been counted twice when the closing inventory was valued. It means closing inventory is overstated with 10,000. This incorrect inventory value was carried forward as the opening inventory 2021. So what is here? What actually happened? Closing in 2020, closing inventory increased 10,000. The same amount they forwarded to 2021 as opening inventory 10,000. So closing inventory in 2020 and opening inventory in 2021 both has overstated. So what is the question? Question asks us, in February 2021, the directors paid a dividend equal to 40% of profit 2020. What are the effects in error inventory valuation? This is our question. So, here dividend, they are given two options how the error is affecting. Dividend paid in 2021, retained earnings 31st December 2021. What is the retained earning in 31st December 2021? So first we can check The closing inventory overstated. Here two mistake. Closing inventory overstated and opening inventory also overstated. Then closing inventory, when closing inventory overstate, what will happen? What will happen to the profit? Profit will overstate. You know what is the reason why profit is overstating? Because closing inventory always deduct in the total cost. So the total cost, when the closing inventory, more inventory we deduct means total cost will decrease. Total cost decrease, closing inventory increase means total cost decrease, because always closing inventory is deducting from the cost of sales. Opening stock plus purchase minus closing inventory. If you are deducting extra overstated amount, it shows your cost less. Cost less means profit is more. That part is clear? So profit will be more here. Next, the opening stock. When the opening stock 2021, this become the opening stock. When opening stock overstated, if it is more than the actual cost. Opening stock always we add, closing stock we deduct. So opening stock add with the cost means more opening stock is there, cost is more. Cost is more means our profit is, in this case, profit is understated. Hope all are clear in this part. Okay. So now they are asking the directors paid dividend. The directors paid dividend equal to 40% of the profit 2020. Profit of 2020 is overstated. So what will happen with the dividend? Dividend also will increase. So dividend part will be increase. So C and D they are giving increase of 4,000. 4,000 means 40% of 10,000. 4,000 will be increased. So first part is clear. Next, retained earning at 31st December 2021. 31st December 2021, the next year. Here the dividend we paid based on last year. So it was overstated. So dividend when we calculate, the dividend also overstated, increased. Now, in 2021, retained earning effect. What is the retained earning? The undistributed profit. So, we are paid the dividend, more dividend we paid, more than the actual dividend is increased. When the distributed profit is increased, the undistributed profit or retained earning, it will be less. That means decrease. So, retained earning will decrease for the same amount because we paid more. 10% mean 40% means 4,000. We paid more. The same time that extra payment will be shows decrease in retained earning. So here C decrease of 4,000. The second one decrease of 14. It is not 14. 40% of 10,000 is 4,000. So what is our correct answer? Correct answer is C. Next, question number 18. A company has the following items in the statement of financial position. They are given some items. Let's see. They are given ordinary shares, retained earnings, long-term bank loan. The company then issue 100,000 bonus share of 5.0 each. its shareholders. What is the total equity after issue of bonus share? So here the bonus share. What do you mean by bonus share? Bonus share is the company is giving fully paid up share to the existing ordinary shareholders. So the business, when they are issuing ordinary shares, they are not getting any cash, only the capital part increase. The same time, the cash company will adjust with retained earning and other reserves. So the question is, what is the total equity? Equity means ordinary shares plus retained earning after issue of bonus share. So let's see. First one, the ordinary share is here 9 lakh. Ordinary share is 900,000. The company issue, the ordinary share is 9,000. The company issue 1 lakh bonus share means the capital will become 1 lakh, capital will increase. Here ordinary share is 900,000. When the company issue bonus share 100,000, it will increase 100,000. But company get any cash? No, they are not getting any cash. So how they will adjust this amount? They will take this amount from 4,50,000. They will take this amount 1 lakh. They take 1 lakh fund 100,000 from retained earning. They add with ordinary share. So our ordinary share will become 1 million. Then here this will become 450,000 will become 350,000. So what is the total amount? Total amount is 13,000. Total equity after issue of bonus share is 13,000, 13 lakh 50,000. So the correct answer is B is the correct answer. So next, question number 19. Which ratios are usually calculated to measure the efficiency of the business? Which are the ratios are taking to calculate the efficiency of the business? The first one, current ratio. Current ratio is not showing the efficiency of the business. It shows how much the current assets and current liability of the business. Gross margin. Gross margin shows how much profit business earned from the sales. That also not shows the efficiency. Next, inventory turnover. How many times inventory has replaced in the warehouse so that it increased efficiency. Next, trade receivable turnover. Within how many period the business, when they are collecting money, and how much debtors or trade receivables are there on the total sales. So 3 and 4 is correct. Correct answer is D. Next, question number 20. Ordinary shares of, what is the question? The following information is available for a limited company at the end of financial year. ordinary share, retained earning, debenture, bank overdraft. What is the return on capital employed? Yes. Return on capital employed. How to calculate return on capital employed? Return on capital employed, ROC, is equal to net profit divided by capital employed. Net profit divided by capital employed. What is capital employed? Capital employed is equal to capital plus long term liability. Long term liability. So first we have to calculate the net profit here. So the net profit is given. What is the net profit given? Retained earnings include profit for the year 94,500. This 94,500 is after deducted interest, tax and everything. So this is the end of the year profit. But when we calculate return on capital employed, net profit before interest and tax, you should take. So net profit before interest and tax, you have to add back any interest and tax given. So in this question, it shows there is 8% debenture. 8% debenture means we give the debenture interest and deduct from the profit. So this profit is after deducted the interest. So what is our actual profit? Actual profit is equal to 94,500 plus 8% of 100,000. 8% of 100,000 is how much? 8%. 100,000 multiply 8 by 100. How much it comes? 8,000. So our actual profit is here 102,500. That is our actual profit. So then our capital. Company capital means the capital fund. Capital fund is ordinary share, retained earning, that is the capital fund, plus long term liability. So 400,000 plus 250,000 plus 100,000. So what is the amount? Our capital employed is equal to 750,000. So ROC is equal to 1 lakh or 102,000, that is our profit. 102,500 divided by 750,000 multiply 100. What is the answer? Answer is 13.67%. So the correct answer is D is the correct answer. Next, question number 21. Question number 21 is question number 21. What is a stepped cost? What is a stepped cost? Stepped cost means the company's cost is changing to variable cost from fixed cost. To a level it move like a fixed cost. From one level it change from fixed to variable. Once it changed to variable, then it becomes stepped cost. Again, that is moving to the fixed cost. So the correct answer is it contains both fixed and variable elements. It contains both fixed and variable elements. That is correct. Then next, it is fixed for a given level output, then increase. Yes, the correct answer, it is fixed for a given level of output. Then it is increasing from that level, then again that is remaining to fixed. So the correct answer, the B, is more perfect. Next, it is fixed for any level of output. No, it is not fixed for any level of output in a particular level. It is a variable. No. So the perfect answer is here. It is fixed for a given level of output, then it increases. Next, question number 22. Which business would use a batch costing system? What is batch cost? Batch cost means producing a group of product and calculating the cost together. So a clothing retailer never use the batch cost because they will have different types of clothes. Footwear manufacturers, yes, footwear we know they will produce as a batch. There they will apply the batch costing system also. So the correct answer is footwear manufacturer. Let's see the other answer. Stationery wholesaler, no. Oil refinery, no, never. Correct answer, B is the correct answer. Next, 23. Details of a company's fixed overhead in a period were as follows. They are given direct labor hours 5,000 and actual labor hours 5,500. Total budgeted fixed overhead was 50,000. The budgeted overhead is 50,000. So total budgeted absorption is like that, it will come 55,000. Now overhead over absorbed in the period were 4,000. Overhead was over absorbed for the year, it was 4,000. What was the actual fixed overhead incurred in the period? Very easy question. What is over absorbed? Over absorbed means if the budgeted overhead is more than, if budgeted more than actual overhead. If the budgeted overhead is more than the actual overhead, it means over absorption. Over absorption. So here the budgeted one is how much? 50,000 fixed overhead plus budgeted 5,000. So the budgeted one is 50,000 plus 5,000. Total overhead 55,000. Now overhead over absorbed 4,000. 4,000 more, the budgeted is 4,000 more than actual. So what will be the actual? Actual will be after deducted this 4,000. So actual overhead is 55,000 minus 4,000. What is the answer? 51,000. Correct answer is option A. Next, question number 24. How might an under-absorption overhead arise? How is the under-absorption overhead is arising? So, first one, overhead have been over budgeted. Under absorption means it is not over budgeted. No. Second, overhead have been under budgeted. Overhead have been, when the overhead is under budgeted, it must be under absorption. So, option 2 is correct. Production was less than budgeted. That time also the overhead absorption will be under absorption. Production was not more than. What is the correct answer? 2, 3. So 1 A, no, B, no. C is the correct answer. Next, question number 25. Which statements explain why it is important for a business to know the contribution per unit for its production? What is contribution? Selling price minus variable cost. After we deducted the variable cost, business want to know the contribution. Then business know how much profit the business is going to get. So, they are given the option. It helps assessing the impact of change in sales volume. Yes, after deducted the variable cost, it will help the business to assess change in sales volume. It helps deciding whether make or buy product. Yes, if the contribution, based on the contribution, business decides what is profitable, making or buying. That also correct. It helps in making long-term decision. No, it will not help in the long-term making decision. It will based on the current sales and variable cost. So the correct option is 1 and 2. So option, yes, A is the correct answer. Next, the following information is available for a month. Question number 26. They are given some information. Sales, direct material, labor. Then they are given overhead, both variable and fixed overhead. They are given. What is the question? What is the contribution to sales ratio? Question is, what is the contribution to sales ratio? What is contribution to sales ratio? Contribution divided by sales into 100. The equation is contribution divided by sales into 100. So how we calculate contribution? Contribution is equal to sales minus variable cost. So here the variable cost are material and labor are the variable cost. These are the variable cost. So sales is given 150,000. So 150,000 minus 45,000 plus 28,000. It means 80,000. 45,000 plus 28,000. Direct labor plus variable overhead also. These three are the variable cost. Including this, it comes 80,000 is our variable cost. So 150,000 minus 80,000. What is the amount? That is 70,000 is the contribution. So now we can do the contribution divided by sales into 100. C by S into 100 is equal to, contribution is 70,000 divided by our sales 150,000 into 100. What is the correct answer? 46.67%. So the correct answer is answer B. Next, 27. A company had the following results: sales, variable cost, fixed cost, profit. 27. So first we have to find what was the margin of safety. Margin of safety in dollar. What do you mean by margin of safety? What is margin of safety? Margin of safety means the extra sales after break-even sales. So margin of safety is equal to margin of safety is equal to actual sales minus break-even sales. That is called margin of safety. The actual sales minus break-even sales. So we have to calculate what is break-even sales. Break-even sales. Break-even sales is equal to fixed cost divided by fixed cost divided by contribution margin. Contribution margin. So first we can calculate the break-even sales. Actual sales is already given here, 230,000. So we have to find the break-even sales. So break-even sales is the break-even sales. What is the equation? Fixed cost divided by contribution to margin. So we have to find fixed cost divided by contribution to margin. So first we have to calculate contribution to margin. Contribution to margin is equal to contribution. Selling price minus variable cost is equal to contribution. 230,000 minus 92,000. That means 138,000. That is the contribution, 138,000. So 138,000 divided by contribution to margin. What is the margin? Sales. 230,000 into 100. So contribution is equal to 60. 60% is the contribution. So now we can apply contribution break-even sales. Break-even sales is equal to, what is the equation? Break-even sales is equal to fixed cost fixed cost divided by contribution margin. Fixed cost is given in the question. What is the fixed cost? 60,000. 60,000 is the fixed cost. So 60,000 divided by break-even sales. What is the break-even sales we calculated? 60%. So the break-even sales is 60,000 multiply 100 divided by 60 is equal to 100,000. So that is our break-even sales. So margin of safety is equal to actual sales minus break-even sales. Break-even sales and actual sales both we are calculated. Actual sales is 230,000. So margin of safety MOS is equal to 230,000 minus our break-even sales 100,000 is equal to 130,000. So the correct answer is option B. If you have any doubt in the solution, please put in the comment box. I will clear you. So 28, question number 28. A company has total fixed cost 400,000. It manufactures and sells a single product of 25 per unit is the cost, and contribution to sales ratio 80%. How many units does it need to produce and sell to make the target profit 200,000? So the fixed cost is 400,000. So when they are, how much they have to produce to sell 200,000. This is the target profit, how much they have to produce. So the equation to calculate the target profit, how much units we have to produce. First we'll write the equation. Equation is fixed cost, the volume of sales. Sales volume we can calculate. Sales volume is equal to fixed cost plus target profit divided by contribution margin ratio. Contribution to margin ratio. So the question gives us fixed cost and target profit, right? Fixed cost is given in the question. What is our fixed cost? It is given 400,000. What is the target profit? 200,000. So fixed cost 400,000 divided by 400,000 plus target profit. Our target profit is 200,000 divided by contribution to margin ratio. Contribution to margin ratio means contribution divided by sales into 100. So what is the contribution to margin ratio? The contribution to margin ratio is already given in the question. What is the contribution to margin ratio? Contribution to sales ratio 80%. So divided by 80%. So what is the answer? 400,000 plus 200,000 is 600,000. 600,000 divided by 600,000 into 100 divided by 80. So the answer it comes 750,000. It comes 750,000 is it comes. That is, it is coming the total sales volume it comes. So here to produce, they are asking the question how many units we have to produce. This is the total production cost we got. So how many units we have to produce? Total sales is 750,000. So how many units we will produce? The units is equal to the single product cost is 25 per unit. It's given. Single product cost is 25 per unit. So if the total sales is 750,000, so the how many units? 750,000 divided by 25 is equal to 30,000. This is the correct unit. How many units we have to produce? Total production cost is 750,000 divided by 25 of single products, 30,000. Correct answer is D. Next, question number 29. A trader makes and sells a single product. It has selling price 90, contribution per unit 30. When 800 units are sold, they got profit 9,600. What is the profit if 1000 units are produced and sold? Very easy question. Huh? If they got 9,600 when they sold 800, how much will be our profit? So first we have to find the profit ratio, how much they got. So let's see. First 800 into, first we have to find the cost to produce 800 unit. The cost to produce 800 unit is equal to 800 into variable cost price. So then we can add the fixed cost. So here 800 units, to produce 800 units, what is the variable cost? Variable cost is equal to selling price minus contribution. Selling price is 90, contribution is 30. 90 minus 30 is equal to $60 is our variable cost. So to produce 800 unit, our cost is, to produce 800 unit, cost is 800 multiply 60. 800 multiply 60 is 48,000 is the variable cost to produce the variable cost to produce 800 unit. Now we have to calculate the fixed cost. Fixed cost, what is the fixed cost we have to calculate? Before fixed cost, then variable cost plus fixed cost is equal to our total cost. So what is the total cost to produce 800 unit? Total cost to produce 800 unit is equal to, we don't know what is the cost, but here they are given the profit to produce is 9,600. So the cost will be, here they are given 1000 unit when they are producing. Variable cost we got 48,000. Now the profit is the fixed cost, total cost we can calculate profit minus selling cost. So here the selling price is given. To calculate the selling price, 800 multiply 90. 800 multiply 90 is the our sales. So sales is 800 multiply 90. The sales is 72,000 minus our profit. Profit is 9,600. So what is the total cost? Total cost is 72,000 minus 9,600 is equal to 62,400 is the cost to produce, and to produce 800 unit, this is the cost. This is clear? Selling price minus profit is equal to cost. So here the cost is, we are calculated 800 unit cost is 62,400. So what will be the fixed cost? 62,400 minus 48,000. The fixed cost will be the difference 14,400. So this is our total cost. Now we know to produce 800 unit, variable cost is, we are calculated the variable cost. The variable cost is 60. Fixed cost is 14,400. Now we know what is the profit of 1000 unit. We have to just apply in the equation. So total 1000 unit, first variable cost. 1000 multiply 60 is equal to 60,000 is the variable cost. Next, fixed cost is equal to variable cost 60,000, fixed cost is equal to, we are already calculated the fixed cost 14,400. So the what is the total? 60,000, 74,400 is the total cost. Total cost is 74,400. Now what is the profit? Here they are asking the profit. To produce 1000, profit is equal to sales minus cost. So sales minus cost, how to calculate? Sales is equal to, selling price is given in the question, 90 is the selling price. So 1000 into 90 minus our cost. Cost is already calculated, 74,400 is equal to 90,000 minus 74,400 is equal to, what is the answer? 15,600. So the correct answer is 29. Correct answer is 15,600. Option B is the correct answer. The last question, question number 30. Why might a business prepare budget? Why the business is preparing budget? To forecast the future. Budget is the estimation of finance, right? So What is the correct answer? To determine the amount of bank loan needs, to determine the skills of labor force. Labor force, we will not do the budget. Identify market share, no. Quality of the product. Budget is the financial estimation. So to determine the bank loan needs. So this is the financial plan. Correct answer is answer A. Hope you all are clear with today's solution. If you have still some doubts, please put in my WhatsApp message or you can put in the comment. I will clear you. If you are not subscribed my channel, once again I say you please subscribe and share with your friends who are looking AS level, IGCSE, AS and A level solution. We are sharing 3 papers, IG, AS and A level. See you with another video. Thanks for watching.